Okay, so what kind of situation do we currently have on NZD USD? Let's make a full breakdown. So starting from the monthly time frame, what we have is a market that clearly has reached a very important structural level from a monthly perspective. In fact, this zone was acting as resistance here. Again, acting as resistance here, preceding all this meltdown to the downside. And now, again, the market has tested this zone, and we can definitely expect a retracement to the downside because always remember, if you have a market that does something like this, down, up, lower low, and equal high, what do you expect? You expect a move to the downside and then a continuation to the upside for the creation of this inverted head and shoulders. And in this case, the market has reached this level. So from here, we expect the meltdown to the downside before the continuation to the upside and creation of this inverted head and shoulders. Going down on the weekly time frame, what we can see. Now on the weekly, we can see the situation is a little bit different because we have this candle here. Now when you have a candle like this, you expect the next candle to actually fill in the wick of this candle. So we actually expect this weekly candle to be bullish and to go for a higher and deeper test of the resistance that we have at this high before the real move to the downside actually starts. Going down on the daily, what do we have? Now, on the daily, the situation is quite contradictory, okay? We know two things. We know that on the daily, we have the resistance at this zone, okay? We know that here we have this previous daily support, which is not a resistance, but at the same time, we know that a lot of stop losses are above this high, and we know that on the weekly, as we have previously said, we have this candle that we expect the next one to fill in the wick. So there are two main ways in which the market makers can actually make this play out. Either the market will go for the simple case, so basically from here, just getting the market to make the melt to the downside, complete this impulse correction and impulse pattern to the downside, and reject the previous support to resistance at this level. This is the easy way. The hard way, so the little bit more manipulative way, is to actually send the market up, hunt all the stop losses that are here, complete the wick of the candlestick formation that we have on the weekly, and at that point make the real move to the downside happen. So basically how we will be approaching this kind of situation with students, where we know that on the daily from here we can expect the move to the downside. However, at the same time we can also expect the market to go and hunt all the stop losses above this high. Well, very simply, as usual, trading is reactive and not predictive. So before I show you how we will be approaching this situation where we have two possibilities, let's go and give a quick check at what we have from a NZD USD perspective. If we check the COT data, so the commitment of traders, which is what the biggest banks and institutions are currently doing in the market and how they are positioned. Now, what we can see if we check the data is that the net positions went from 2.4K to minus 800K. So from a situation where we had way more longs than shorts to a situation where we now have more shorts than longs. So institutions already started adding shorts on the NZD and it closed longs. In fact, they closed with the last report 2.2K longs and opened 1.1K shorts. So definitely they already started adding shorts from an NZD USD perspective. And why do I say NZD and NZD USD if we're only checking the NZD? Because all currencies on the spot are traded against the USD. Therefore, if you are checking the data for the NZD, what you are actually already checking is NZD USD because all currencies on the spot are traded against the USD. So if you check NZD, you're already checking NZD USD. So institutions already started adding their shorts. However, we don't know how much liquidity they actually need in order to make this move to the downside. So either they already have the liquidity, in that case, they can make the move to the downside from here, or they will have to go and hunt all the stop losses above this high. As usual, the best time frame to confirm the direction of the market and the intentions of the market is the 4 hours, because the monthly, the weekly, and the daily combined with the COT data are the best for the direction of the market. But when it comes to entry, the best time frame is the 4 hours. So what we will be doing with students? With students, we will be monitoring price action on the 4-hour time frame. And if everything will remain bullish, obviously we will not be looking for any shorts because the market obviously means that first wants to go and hunt all the stop losses that are above the high. On the other side, if we will clearly start seeing the market shift from a bullish to a bearish market from a 4-hour perspective, but keep in mind that here and here we still have support, so levels that the market must break. If the market will actually shift to a bearish market, at that point we will be looking for a short from this zone. So simply put, with students, we will be monitoring price action all inside of this area, this big zone here, waiting on the 4-hour time frame for the market to shift from a bullish market as it is right now to a bearish market. And if the market will shift from a bullish to a bearish market, at that point we will be adding NZD USD on watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, completion of this impulse correction, impulse pattern to the downside, and to see the market actually create a lower low. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.